Bitcoin isn't just an investment anymore. For a lot of people in the US, it's starting to feel like something more than that. For some, it's becoming a way to deal with rising costs, a way to protect their money a little better, and in some cases, a way to feel more in control. Just think about this for a second. What if you put only $50 a week into Bitcoin? Nothing crazy, no trading, no panic, no trying to time the market, just a small, steady habit. And over time, that habit starts turning into something meaningful. Now compare that to leaving your money in cash, while inflation slowly keeps eating away at its value, month after month. So really, the question is simple. Are you letting your money sit still, or are you giving it a chance to work for you? Hey everyone, welcome back to the channel. This is the place where we talk about real-world money, finance, and crypto in the simplest way possible.
So, if you want to better understand how money works and how regular people are trying to build wealth step by step, make sure to subscribe and stay with me till the end. Let me tell you about someone we'll call John. John is 32. He lives in California, and he works full-time in retail. After taxes, he brings home around $4,200 a month. A few years ago, that felt okay. Not amazing, but enough to live on. Now, it doesn't feel the same at all. Every month, John has the usual bills, about $1,800 for rent, around $500 to $600 for groceries, roughly $250 for gas, then health insurance, phone bill, subscriptions, and all the little costs that keep adding up. And before he knows it, most of his paycheck is already gone. And that's where the real problem starts. Prices keep going up, but his income, it's pretty much the same. So even when John tries to save, it doesn't feel like progress. It feels like he's falling behind. Not because he's careless, not because he's doing something wrong, but because inflation quietly reduces what his money can actually buy. And that part, a lot of people feel it, even if they don't always know how to explain it.
At first, John didn't pay much attention to Bitcoin. Like a lot of people, he thought it was too risky, too unstable, too complicated. Something for traders or tech people, or people who just like to gamble. But over time, he started noticing something. The conversation around Bitcoin was changing. Big companies were talking about it. Investment funds were paying attention. Even financial advisors were starting to look at it differently, not just as a quick bet, but as a long-term asset. And that made John curious. So instead of rushing in blindly, he decided to do something smarter. He started learning first. John didn't throw in thousands of dollars. He started small. Very small, actually. Just $50 a week into Bitcoin. That was it. No matter what the price was, he kept doing it. Sometimes Bitcoin was up. Sometimes it was down. He didn't overthink it. He just stayed consistent. That strategy is called dollar cost averaging, and the reason people like it is because it takes emotion out of the process. There's no guessing, no pressure, no constant stress, just a simple routine. And along with that, John made one important rule for himself. He would never invest money he couldn't afford to lose. That rule mattered because it kept him grounded. Then, of course, something happened. Bitcoin dropped. And when that happened, John felt what most people feel. Nervous. His investment went down. The numbers didn't look good. And that little voice in his head started talking. Maybe I should sell now, before this gets worse. That feeling is real. A lot of people experience it. But John didn't react right away. He paused. He stayed calm. Because by that point, he understood something important. Short-term volatility is normal. That's part of Bitcoin. But long-term thinking, that's the part most people struggle with. And John was trying to think long-term. As time went on, John became more organized with his money.
He built a simple system. Nothing fancy, just something practical. First, he focused on an emergency fund. Then he made sure his monthly expenses were covered, and only after that he invested. From his savings, he kept some money in cash. He kept buying Bitcoin regularly, and he also added some exposure to stocks. So Bitcoin wasn't the only thing he believed in, but it was the part he believed in most. And that balance helped him stay steady. Because real financial progress usually doesn't come from one lucky move. It comes from having a system and sticking to it.
Later on, when Bitcoin started rising again, John didn't make the mistake a lot of people make. He didn't rush to sell everything. And he didn't get greedy either. Instead, he took some profits gradually, a little at a time. He moved some of those gains into safer assets, and he left the rest invested. That way, he was still protecting upside while also managing risk. Because real strategy is not about perfectly calling the top. It's about making smart decisions without letting emotion take over. And there's another part people often ignore. Taxes. In the US, Bitcoin profits can be taxable. And that matters. So John made sure he tracked everything, every buy, every sell. He used simple apps to calculate his gains and stayed organized. Because smart investing is not just about making money. It's also about keeping it. And staying compliant is part of that. Today, John is not rich, at least not in the way people usually imagine. But he's also not dealing with money the way he used to. He's less stressed, more clear, more disciplined. He has a plan. And maybe most importantly, he understands his money better now. He knows how to make it work harder for him, instead of just watching prices go up around him. So now the question becomes, what are you doing with your money? Because Bitcoin is not just about hype. It's not just about headlines. For some people, it's about having a strategy, especially in a world where everything keeps getting more expensive. If this helped you, make sure to like, subscribe, and I'll see you in the next one.